So just a quick disclosure, I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. Quick position disclosure, am I net long? Am I net short? I'm not even entirely sure at this point. I'm probably pretty neutral. I've got long positions on, I've got short positions on. I re-entered TZA this morning, which is a bearish bet on the market just because of how we gapped up and the extension on the IWM. I can talk about that when we look at charts. Have some TQQQ to the short side from a few trading sessions ago. Have Uber to the short side from its earnings day. We can talk about all that. Quickly about me. So, my name is Derrick Oldensmith. I am senior trader and registered principal for T3 Trading Group. I've been trading with T3 Trading Group since 2011. I was with T3 Capital before that. I've mentored well over 100 professional traders for the firm. Currently managing a group of well in excess of 50 at this point. It's probably in excess of 100 professional traders. And I've been with T3, so just because we're there just about, I might as well say. So first it was T3 Capital, it changed to T3 Trading Group in 2011. If you include my time with T3 Capital as well, I am approaching my 10th anniversary at the firm in about a week. So maybe I should hold off till next week's webinar to celebrate with you guys. But basically, I've been with T3 in one form or another for 10 years now. And time went fast. It went real fast. And it's helpful that I enjoy what I do. If you want to get in touch with me at any point, here's my email address, my first initial last name at t3trading.com. If you want to talk about becoming a professional proprietary trader with T3, if you want to talk about retail accounts with T3, if you want to talk about markets, reach out to me. Happy to chat. All right, let's go to the charts. Let's talk about what's going on right now with this crazy market. All right, so here is a 5-minute chart of the SPYs. Let's start with a daily chart of the SPYs. Daily chart of the SPYs. We have closed above where we have opened 1, 2, 3, 4, 5, 6, 7, 8, 9 trading sessions in a row. 9 trading sessions in a row. Currently, we're up 0.25% on the day for the SPYs. We're down a little bit from where we opened. Can it be 10 trading sessions in a row? I don't know. I guess we'll find out at the close. But like I talked about last week, the technicals of this market are extremely bullish. The Qs, however, have taken a little bit of a rest. What we've seen over the course of the last handful of days, last couple of days really, is intense money rotation. NASDAQ has taken a break while the names that have been laggards, the stocks that have been laggards post-coronavirus, the IWM being the index that's been the biggest of the laggards, the Russell 2000, has taken off. We talked about this resistance level at 150. It broke through 150, what is this, 4 trading sessions ago? And a few trading sessions later at 160. It's an incredible move. At this point, the IWM is extended to the upside. Once again, by the way, the IWM is up 0.8% at this time. Qs are down 0.5%. That's what we've seen over the course of the last few days is money rotation, not a sell-off. And if anything, this is bullish. And this is what I was speaking about a few weeks ago. A few weeks ago, before the big earnings reports from Apple, Amazon, Google, Facebook, I was really talking in here that I was expecting to see some money rotation. I was expecting to see the NASDAQ take a pause and the IWM catch up. And I said then that if the NASDAQ goes sideways and the IWM catches a bid, I can't think of anything more bullish than that. This is what the bull market looks like. One thing takes a rest, money rotates into somewhere else. Coronavirus, forget about it. The market doesn't care. I talked about this last week. Last week I was frustrated. This week I'm less frustrated. Last week I was really frustrated because, and even this morning, I was talking about my team the same thing. If you look at the news, all you see is, for the most part, bad news, right? The virus situation is not good. The U.S.-China relationship situation is not good. The U.S. government situation is not good. But the technicals are bullish and we keep going up and up and up. That's what we have consistently seen. And now the S&P is a hair away from all-time highs. What coronavirus? Right? All-time highs back here in February for the SPY, 339.08. This morning pre-market, we were basically $1 away from that. We got as high as about 338 this morning. So we're basically $1 away from all-time highs in the SPYs. The technicals of this market remain very bullish. We had this bullish breakout of this time correction, and it's just been grinding higher. Like I just said, 9, 10 green candles here in a row on the daily chart. And the NASDAQ has just taken this little rest, and money gets rotated into somewhere else. These are all classic signs of a bull market. Classic signs of a bull market. We're not seeing sustained selling in any one place. One place takes a rest, somewhere else gets bid up. Are there signs to pay attention to that maybe this could change? Could all-time highs in the SPYs act as resistance for this market? It absolutely could. Right? We're almost at a 100% retracement of the initial down move. Can that hold as resistance in the S&P? It absolutely could. What signals do we want to pay attention to? We want to pay attention to the dollar right now. I want to pay attention to UUP. Is the ETF I look at is the dollar. If the dollar has a sustained bounce here, that would be bad for the equity market. I want to pay attention to treasuries, TLT. If the TLT continues to sell off, which is it's a few days in now, that would generally be bad for the market. Well, really, it's good for value and it's bad for growth. So I would think, this is what I thought, this is what I said even a few trading sessions ago, I would think that if the TLT sells off, that means that interest rates are going up, the yield curve is steepening, that is good for banks. It's good for value. It's good for what have been the coronavirus laggard names. Your airlines, Boeing, banks. What it's not good for is tech. Tech thrives off free money. And we've had free money, maybe not for you and me, but free money if you're running a big public corporation for the last 10 years now. And free money has gotten even freer as a result of the financial crisis. And that is what has helped the NASDAQ to rally like this. I mean, if you really look at the underlyings of the S&P 500, it's something like 80% of the gains can be attributed to basically five companies. Something in that range. And we all know what those companies are. Amazon, Apple, Facebook, Microsoft, right? And we've seen also all these software companies, other types of stocks that just thrive off this free money situation that the market has found itself in. Just be able to continue to do really well, right? Like your Zoom. But look at this Zoom take a little bit of a hit here the last few days. Zoom potentially getting below some support, worth paying attention to. And again, TLT, right? Interest rates going up, money is not as free, tech takes a break, but it's good for banks, it's good for value. So I really thought that just because the big tech companies are such a large percentage of the S&P, that if I saw the TLT start to sell off, that it would actually cause the SPYs to sell off as well. But it really hasn't been that way. And again, it's just the money rotation theme. It's a bull market. How do you know it's a bull market? Well, first of all, we're at basically all-time highs, and the technicals are bullish. But other clues, the market doesn't care about bad news. I feel like every morning, all I do, I almost don't even want to do research in the mornings anymore. Let me just look at charts. Because every morning, all I do is I read about bad news. I'm reading about the statistics and the numbers on coronavirus with the kids going back to school. They're able to just carry around the virus and transmit it to other people. We've already seen certain schools have to close and reopen since they opened down in Georgia and in Indiana. Kids can't get back to school. The parents can't get back to work. And you would think that that's not good for the economy. And the market's supposed to be a forward-looking mechanism. But don't think about all that. What I'm telling my team is if you have a short thesis on this market, just let the technicals show you to implement it. So one of the things I love to do is gap analysis. So this morning, this is back to my 5-minute chart, we had a common gap to the upside in a bull market, right? In an uptrending market. So a common gap to the upside, that's this space right here. This is yesterday's close, this is today's open. Common gaps tend to get filled, right? What is a gap fill? A gap fill is when the price action trades through and fills the gap. Oftentimes, gap fills act as general support or resistance areas. So what I'm doing right now is I've got longs on. I'm not super heavy, but I've got longs on in a whole bunch of stocks, right? I've got Twitter, I've got Micron, I've got Lemonade is a recent IPO, I've got General Electric, I've got CHNG, I've got Walmart, I've got Microsoft, I've got INSG, I got some Snap still I got in yesterday, lighting it. So I've got these longs in the market because the technicals are bullish. And what I'm trying to do is, if the market gives me the right signal, put on intraday shorts. And then I'll know to keep those as more than just intraday shorts if we close weak. So, but then I need the appropriate trade that can enable me to put on those intraday shorts. So this morning, as an example, we're having a common gap up. So what does this gap mean to me? It means if you're looking long on this market, to be patient. Why? Because gaps tend to get filled. Common gaps, that's what this is, tend to get filled. So if I'm buying stuff right off the open, I might be fighting the market as it pulls back. I don't want to do that. So if you want longs, you want to be patient. And if you want shorts, which, it's hard to even want shorts with what the market looks like, then you can go after those shorts off the open into the gap up, looking for that gap fill, that price correction. And then from there, see what happens. If we roll over further, you're in a great spot. And if it comes back up and it stops you out, we'll put you in the position, put yourself in the position to not lose money on it. So that's basically what I'm doing, right? So, for this morning, I basically came in almost entirely net long. I had some Uber short from earnings, which I can talk about real quick. So here's the earnings day on Uber. I traded after hours that day. I think I initially shorted around 34 or so. Then the next morning, I reshorted at about 33.50 into the initial spike, and I've been pushing it and trading it to the short side since then, just with a simple target of back down to this rough support area of about $30. It actually almost got there this morning. Got a little lucky with some news into the afternoon yesterday with the ruling out in California that they, related to the gig economy versus employees type of thing. That's technically bearish for Uber and Lyft. I personally think that their buyout of Postmates in the long run is a fundamental disaster for the company. Uber just compounds businesses that consistently lose money on top of each other. And how are they able to do it? They're able to do it because money's been free for so long. But eventually, Uber needs to change their business model. Right now it's like if you take an Uber anywhere, they're basically subsidizing you to take that Uber, and that doesn't make sense to me. I'm not just going to blindly short it. I still want something with the technicals, so I was able to again short on the earnings report. So I came in, short Uber, short TQQQ, seeing this gap up this morning, and then utilizing that as an opportunity to try to get in some positions. So I bought TZA this morning. Why TZA? TZA is basically like the inverse of the IWM. So the IWM has been the strongest recently, but it's extended. How do I know it's extended? Well, I utilize the space between the 8 and 21 EMA as the equilibrium area for any stock or chart that I'm looking at. So this morning, IWM gaps up to near this 160. It's had this incredible move, but it's also extended on the daily chart. Now, extended stocks and extended markets can continue. They can continue to go higher and higher and higher because that's how momentum works in the stock market. But eventually, it needs to correct. So for myself, I'm looking at this right off the open, and I'm like, okay, let me short some IWM via buying TZA, and I'm just going to basically give it to the pre-market high, or in the TZA case, the pre-market low. And I'm going to utilize the fact that we're having this common gap to see if I can cover my risk, right? So, here's TZA, right? Here's me buying. And then all I need, and I was able to add here, so the green, these are buy dots, these are sell dots. All I need is a big enough of a move versus my risk to sell enough of my position that my trade becomes what I call free. Quote, air quotes here, air quotes free. I have free stock, which basically, when I say I have free stock, what I mean by that is let's just say I had $100 risk on this trade, and it was more than that. But let's just say, to keep the number simple, I had $100 risk on this trade, and it starts to go in my favor. If I sell 50% of my position at 1-to-1 of my risk, the remaining 50% of my position is free. Meaning, if I have $100 worth of risk, and it goes up, and I sell half that position, I put $50 in my pocket. If the position then goes down and fails, I would lose $50 on the remaining position. So I make $50, I lose $50, net I'm zero. It's just math, right? So that's a position I try to put myself in a lot with my own trading. Because once I'm able to get my risk covered, I don't really care what happens. If the market finally does have a deeper correction because of all the bad news that's out there, then I've got great stock that's free. And it'll help hedge my long positions, and I'll just be able to make money on that. But if the market continues its uptrend, then fine, I'll just get stopped out of those shorts. I'll make nothing, I'll lose nothing, but I'll continue to get paid on my longs. So what I'm trying to do as a trader is consistently over time put myself in the position to be able to make money. Like the position I want to constantly be in is either I make money or I lose nothing. All day, that's what I'm doing. Let me try to find these spots where I can put myself in the position to make money or lose nothing. And if I just continue to do that, and I'm able to get those 1-to-1 kicks to cover that risk like I'm talking about, all I need to be able to do from there is then relax. And if things then work in my favor, then guess what? I'm going to get paid. And if they don't, I'm not going to lose anything. So when I see this common gap up this morning in this insanely bullish market, which cannot last forever, and it is approaching all-time highs, I still want to be long. Why do I want to be long? Because all these technicals are bullish, and the trend is my friend, and the trend is working its way up. But I also want to have myself covered if the market pulls back. So I did that in the TZA this morning. I still have that position because the intraday lows here are still so far held, right? So my out is more or less at lows, and if this thing really explodes because the IWM actually has a correction, it's going to pay me great. And if it stops me out, that's fine too. And as another example, I did the same thing in UVIXI this morning. And I actually got stopped out of UVIXI. So the same thing in UVIXI, same exact thesis. I got my risk covered, traded a little bit here for cash flow. And this red dot right here, when it made lows here, that's me getting stopped out of my position. Guess what? I got stopped out at the low of the day in UVIXI. This is something that everyone complains to me about all the time. Oh my God, I got stopped out at the low of the day, and then it went up. Well, guess what? Tough. You're working in probabilities as a trader. And when you're working in probabilities, if your goal is to be a successful trader, you need to understand how probability works. If you have an edge in the market, the risk-reward probability of success formula is in your favor in the long run. But it's still probability. What does probability mean? Probability means that sometimes you will do all the right things and lose money. Sometimes you will do all the wrong things and make money. So what I tell my traders is you don't want to just assess the result of a trade to decide whether or not it's a good trade. You need to assess the process, because again, sometimes you do the right process and the result's not good, and sometimes the opposite happens. Sometimes, because again, you're dealing in probabilities, you get shaken out of your position at the absolute low and then it works in your favor. That sucks. It's so frustrating. But what are you going to do? It's part of probability. The worst thing to do is to now entirely change my game plan for going forward, because of one circumstance where I happen to get stopped at the apps low and then it works. I love showing you guys my trades that don't work out. And by the way, because I got my risk covered on this trade, this is another example of a trade that failed where I really didn't lose any money. It's basically a break-even trade for me, even as the trade failed. Because again, those are the... am I a little bit upset that I got stopped out of a decent-sized position in this at the absolute low, and then from there it proceeded to rally 50 cents in my favor, and maybe that becomes the absolute low, and then maybe next thing I know this thing's at $30 and I don't got stock? Of course I am. But it's not worth stressing about, because this is just the mechanics of the market. It's how markets work. And you need to learn to be okay with that. I know my process here was very sound. And because of that, because I know I did the right things, it just is what it is. I got to move on. So, just a couple things I wanted to basically go over. What I'm trying to do in these weekly sessions is, obviously I'm trying to talk about markets, my expectations for markets, and what's going on. But I'm also trying to provide some light into I'm also trying to provide some light into kind of how we trade, what we're looking at, how we learn to utilize all these things that you need to be looking at the same time, from the bigger picture trend, understanding the dynamics of the market, understanding money flow, breaking it down, understanding how gaps work. Gap analysis is a huge part of my own trading. I think that there's a tremendous amount of advantage in understanding how gaps work. Really, at the end of the day, what you're assessing when it comes to gaps is, what does this gap up do to the participants who are already in the marketplace for that stock or for that market? And if you can understand how it positions people who are already in the market, you can understand what they're most likely going to do next, right? I think Charlie Munger said that the older he gets, the more he understands that incentives are the root cause of all decision-making process. So basically, if you understand what the gap is doing to the current market participants, you understand what they are incentivized to do next. Well, this type of gap up, what the market participants are incentivized to do is book profit. You're going to tend to see an excess of sellers and a lack of buyers in that gap. I'm sure there's a little wishy-washy volatility here, and we actually broke that opening high, but then bam, that gap fill came in. Usually when the gap fill happens, it's in the first 30 minutes of the day. This was slightly after it today. We filled the gap basically at 10:05, and then again, that gap fill area held a support. I said in my VTF room to my team, I was like, guys, we're probably going to bounce here. Let's look for a bounce. Then we got this inside 5 and up from there. Now, I didn't expect that we would bounce all the way back to highs necessarily. I thought that there was a chance that maybe we would just, retrace a percentage of this down move, maybe retrace to here, and then work our way lower. But how do I know that that is not a super high probability scenario? Again, going back to the big picture. So, to really be a successful trader, trading is not just this binary thing where you just see, oh, here is my one trade in this one stock based on this one resistance level. No, it's about coupling that one trade that you see that's based on that resistance level with what the daily chart looks like, what the intraday chart looks like, what the SPY chart looks like, because there's a correlation there. Understanding relative strength and relative weakness, understanding time of day, understanding gap analysis. So what you really need to be able to do to be a successful trader is put all of that stuff together. And that, by the way, is exactly what I harp upon and teach to my professionals that I work with on a day-to-day basis. If you're a professional trader with me, you get access to a training program. The training program talks about all this stuff that I'm talking about, right? It starts with basics, understanding, risk reward, basic trade setups, then understanding probability. Gets more advanced into market psychology, how to trade IPOs, etc. So you start with this training program that I provide to you to give you a foundation. And then from there, we have our daily morning and afternoon meeting. Morning meeting is more about idea and information sharing. Afternoon meeting is obviously a review of what the market did. What I try to do very specifically in the afternoon meeting every day is I'm trying to draw out real-time lessons from what the market did so that the entire group of traders that I'm working with can learn from real-time situations, basically, of what happened during that day, so we can all learn and become better traders for the future. And that's part of my own process of my own success as well. By doing those reviews, it makes me a better trader. So become part of the group. Reach out to me. Learn about professional proprietary trading. Or if you reach out to me because you are a retail trader, that's another, retail accounts with T3 Trading Group are awesome. We do not sell anyone's orders out, unlike the other major brokers. Whatever your broker is, just Google their SEC 606 report and you'll be able to see who they're selling your orders out to. We do not sell anybody's orders out. You get direct market access on professional software for our retail traders, and same thing. You'll get access to my training. You'll get access to the virtual trading floor, the morning meeting, the afternoon meeting. I am incentivized to make the traders that I work with as successful as possible. And that's my number one goal. So reach out, join the group.